You ask, I deliver. Now that Bitcoin spent the last couple of weeks bouncing off its lows, the whole crypto industrial complex is back in full gear, trying to entice people back in. I think that would be a huge mistake for you, which is why tonight we're going off the charts with the help of Carley Garner. She's a brilliant technician who's the co-founder of Carley Trading, the author of Higher Probability Commodity Trading, and, by the way, our resident commodities expert, in order to explain what's wrong with crypto from at least a more quantitative perspective, not an emotional one. Now, everybody knows that Bitcoin and Silk have had a legion of cheerleaders. Even after the FTX debacle and the wave of crypto exchanges either going under or getting charged by the SEC, or both, they haven't stopped. For years, these people told us that Bitcoin was the perfect replacement for gold as an alternative asset. They said it was a great hedge against inflation in a world where central banks were printing money like crazy. But in reality, it wasn't a hedge against anything. I want you to take a look at this chart. This is a daily chart of the Bitcoin futures and the NASDAQ 100 futures going back to 2021. What do they have with each other? Garner points out that Bitcoin's practically joined at the hip with this tech-heavy index. I was shocked when I saw this. That's what it is. You know what it means? It means it's a risk asset, not a currency, not a stable store hold of value. Imagine business owners trying to conduct transactions with shares of Facebook or Google. Hey, sold to you. It's ridiculous. They're too volatile. Bitcoin's no different. The question is, why does crypto practically trade in lockstep with the NASDAQ 100? Garner thinks it might have something to do with this. It's a little complicated. Counterparty risk. The probability that the other party in an investment or a transaction might not hold up their end of the deal. For example, if a crypto brokerage fails, like so many have, the clients might not get their money back. That's counterparty risk. As Garner sees it, whenever the economy is in trouble, investors flee from anything with counterparty risk. Few professional money managers want a piece of this stuff because it's like a ticking time bomb. Of course, you can just own Bitcoin directly in a decentralized wallet. That protects you from counterparty risk. But if you ever want to use it for anything, the risk is back on the table. And as FTX's customers learn, it can be devastating. On the other hand, gold, well, it's the opposite. Very different. Remember, for the better part of a decade, all of these cryptoids told us that gold was a thing of the past, the future belonged to digital gold. But man, Garner points out that gold doesn't have counterparty risk. The markets that gold futures trade on are actually regulated. Best of all, the precious metal's been performing very well since last October. That's your hedge against inflation or economic chaos. I love that. Look, it's not just that Bitcoin trades more like a tech stock from anything else. It's also the furthest thing imaginable from any kind of currency. Now I want you to check out this daily chart of the dollar index, Bitcoin, and let's throw in gold. Garner says it's very clear that Bitcoin is not trading as if it were a currency. Telltale sign that markets simply don't believe this nonsense. On the other hand, even though gold hasn't been useful as an actual currency for over a century, it's still negatively correlated to the U.S. dollar. As Garner sees it, gold is a good way to bet against the dollar, at least a lot of dollars being printed. Bitcoin, not so much. Look at this chart for much of 2021, okay? What you see is the dollar index was trading in the 90s and interest rates were more or less non-existent. That allowed gold and Bitcoin to fluctuate on non-currency related fundamentals. But then Russia invaded Ukraine in early 2022. The dollar soared and inflationary threats forced the Federal Reserve to aggressively raise interest rates. That further fueled the rally in the greenback. In response, both gold and Bitcoin got hit. Really interesting, isn't this? Meanwhile, the dollar's been in free fall since late September. That's why one of the reasons I recommend so many of the stocks that are dollar weak beneficiaries. Gold has rebounded like crazy over the same period. It's exactly what you want. Until the last couple of weeks, Bitcoin totally failed to play catch up. Now Bitcoin's making this crazy move. Well, how good is it? Well, it's getting some lift, and Garner wants you to make sure you understand that this rebound will not be like previous rebounds. I want you to take a look at Bitcoin's weekly chart. At the end of the day, you got to remember that cryptocurrencies don't trade on any kind of fundamentals. They're not backed by anything. The crypto enthusiasts will say that the same things about the United States dollar. Oh, I've heard that so many times. But that's actually nuts. Our currency happens to be backed by the most powerful nation in the world, which has the ability to raise revenue by levying taxes. It's a big difference. So if we want to get a read on where something like Bitcoin might be headed, we need to turn to the technicals, which is why we're consulting with Garner. As she sees it, the odds favor lower highs and lower lows. We know Bitcoin had huge moves in 2020 and 2021. But that was when the Federal Reserve had cut interest rates to practically nothing because of COVID, and Congress was blasting us with handouts in order to prop up a COVID-riddled economy. Those conditions were fabulous for speculative assets like crypto. But now the Fed's tightening aggressively, and Congress is in a standoff over the debt ceiling. The last one of those resulted in major budget cuts. Could happen again. You know what that's good for? Well, I know this. It's real bad for speculative assets. Now, Garner points out that Bitcoin gapped higher in December of 2020, from about 25,000, 26,000. Then it gapped lower last June from 28,000 down to 27,000. Look at those two moves, okay? Looking at them, Garner thinks the line between a Bitcoin bull market and a Bitcoin bear market lies somewhere in the mid to high 20,000s, okay? Specifically, she sees a ceiling of resistance at 23,000 with another ceiling, and this is the one I think is going to come into play, at 28,000. She highly doubts Bitcoin can break out above 30,000, although, look, I have to say, you know, sometimes when you're dealing with charters, you have to accept this. If somehow it gets above 30,000, she will reconsider her negative stance. Looking at the chart, though, Garner believes the path of least resistance for Bitcoin is lower. Where to? She wouldn't be surprised if it falls all the way to 7,000 or 8,000. I'm going to repeat that because there's so many bulls. Again, 7,000 or 8,000. And sooner than most investors seem to expect. In the meantime, Bitcoin's got two potential floors of support. There's 15,000 and 13,000. Given that it's currently at nearly 23,000, that would represent a lot more downside than most of us can handle. By contrast, Garner loves what you see in the weekly chart of the gold futures. While the gold market's got a reputation for volatility and irrationality, it looks downright calm compared to Bitcoin. Of course, the precious metal still came under pressure last year as money managers used it as a source of funds. That volatility pushed gold below its uptrend line, going back to the summer of 2018, which was unfortunate because it fooled a lot of people. But after 2 months, it rebounded above that level. Again, it's also above its 200-day moving average. I like that. See, this is a very important position right here because it's so far above the 200-day. As Garner sees it, gold's previous uptrend is once again in play. She expects it to hold as gold prepares for a run to much higher prices. That said, when you look at the relative strength index, which is down here, and that's an important momentum index, it's running a little hot. So Garner wouldn't be surprised to see a modest pullback here. However, as long as gold holds above its floor of support at 1,800, she eventually could see it run to 2,100 and then ultimately to 2,600. Let me give you the bottom line here on this. The charts, as interpreted by Carley Garner, suggest you need to ignore the crypto cheerleaders now that Bitcoin's bouncing. And if you seriously want a real hedge against inflation or economic chaos, she says you should stick with gold. And I agree. Let's take phone calls. Let's start with Nico in Illinois. Nico.
Jimmy Chill, a big booyah from Chicago.
Good to have you, Nico. What's happening?
I appreciate it. I want to send out a quick shout-out to you, Jeff Marks, and the CNBC Investing Club. Quick story. I started out with you guys around the time of the start of the pandemic. I am now a graduate of college, paying off my student loans, and the big part of it is thanks to you guys. So thank you, Jim.
Nico,
I appreciate it.
Thank you. All weekend, I was at a fabulous wedding for my best friend's son, and people ask me, Jim, why are you still doing this? I should have said because of Nico. I was just saying, there's all the great people who talk so nicely like that. How can I help you? What's your question?
Well, I want to know a little bit about Upstart. These buy now, pay later companies, they've had a lot of growth with their IPOs until recently. Two questions. Do you think these stocks are going to continue to grow? And is the best of the pack Upstart? Okay,
this is a tough question because these have been absolutely the worst stocks to own. I think Upstart can bounce because we're having a bounce in a lot of stocks that have a serious short position. But I think as the Fed keeps tightening, every time they tighten, that stock's going to get hit again. We got to up our quality. We got to make sure that we're in some of the industrials we've been buying with the club, which I think are a lot safer. Okay, tonight's chart says ignore the crypto cheerleaders now that Bitcoin's bouncing. And if you seriously want a real hedge against inflation, she says stick with gold. I agree. Much more Mad Money had last week. We got an update from Eli Lilly. There's another one for Nico to do, a little contrary. It has investors concerned, but I like that. Could be more to the story. I'm breaking down the headlines and sharing if this really something worth worrying about or not. then I've said it before, but this is one of the craziest downturns I've ever seen in my career. But what sets this one apart from the others? I'm going to give you my take and all your calls rapid fire tonight's edition of the Lightning Round. So stay with Cramer.